was pretty outspoken about the whole FTX debacle and all the ties to, everything from Epstein, to Ukraine. And literally while I'm talking, power went out, the lights went down. And I found out later that the guy was still live streaming, and he's just like, I think the black hats showed up and took him because, I was saying stuff that they wouldn't like. But anyway, so I'm still around. All good. Bitcoin Pizza Day. And again, I shouldn't do this, but I will. I am wearing, not only wearing the orange pants, but I'm wearing the Bitcoin Pizza socks.
Let's go.
Look at that.
A true professional.
And the orange pants. Wow.
Mount Socks are my good friends, and they send me, some special gifts every now and then. And someone asked me, they said, do you wear those for satire, for lifestyle? Like, in fact, I coined a new term last night. I'm sure someone else already did it, but have you seen the Salt Life stickers, bumper stickers?
Yes.
I was like, Sat Life. So I actually created a logo for Sat Life that I'm going to try to get out there, but I'm sure someone already did it. But no, look, thank you for having me on. That is a momentous number. Congratulations. They say 18 days of anything is a habit, right? So if you can do anything for 18 days or 18 consecutive times, you make a habit. So 100 is really special. There aren't many shows that make it to 100 and keep people's interest. So again, honored to be here. Everything's tied together, and we know that, right? But we don't realize how tied together things are until you really step back. And I mean, come on, just look at our money, right? It's got the freaking all-seeing eye on it. I mean, come on. And that's real. So anyway, but I digress. I wear, so you can see them. So I wear the orange pants every Friday for Bitcoin Friday. So it's like, Mark, it's Thursday. Like, yes, I know it's Thursday. But my partner and I, Xavier, do a weekly show, Digital Currents, and we just riff about, AI, blockchain, chips, and data, the ABCDs of the digital age. And so I wear my orange pants and I do a sock reveal every Friday. But he's going on vacation tomorrow, so we recorded yesterday. And so I forgot I didn't remember we were, long story short. I said for Bitcoin Pizza Day, I would just wear my pants, and then tomorrow I'll wear shorts. So, and look, Bitcoin Pizza Day is important. And people make fun of Laszlo because, he gave away 10,000 Bitcoin for 2 pizzas. If he would have kept them, he'd have 1.1 billion. Yeah, sure. But that transaction is one of, and it's not the only, but it's one of the key points that allowed us to get where we are. Like I say this all the time, the miracle of Bitcoin is not that we just went from 74K to 111K. It's not that we went from 10,000 to 60,000 or even 1,000 to 10,000. The miracle is that we went from 0.0003 to $1. That's the miracle. The fact that it actually caught, that the technology actually caught on, and doing a transaction was what we needed. And we're a year in, right? It was May 22nd, 2010. So we're more than a year in, a year away from Hal Finn saying running Bitcoin. And so it's pretty important. And he did create also the first GPU miner, which pretty big deal. So lots of contributions to our stacks. Well, I appreciate that. Like I say, you can still listen. Every Saturday morning, I tweet out Digital Currents now. So it's not Mike and I anymore. But it's my partner, Xavier. And X is a little older than Mike. So the thing Mike and I had was the generational, gap that we could exploit and take advantage of. And we had, good chemistry and it was fun. But X and I, it's not quite the same because it's not just digital asset focused, because we do talk about boring stuff like chips, although to me, chips are beautiful right now. They're one of the most important things on the planet. But that said, you can still get your Saturday morning coffee fix if you want. Or people could listen to this. So from the Dominarius Bank or Dominus Bank or whatever it is that Eric started down in the basement of Trump Tower.
Exactly.
It's a classic case of supply and demand and some unwinding of some very large leverage in the global system. So look, most people don't think about government bonds like ever. most people just don't until they get older, and then they love bonds. Old people love bonds because they're safe. But the average young person doesn't think about bonds ever. So the thing about it that's interesting, like if you ask someone in college, what do you want to be? Oh, I want to be an equity manager. I want to work on Wall Street. Okay, you want to be a high yield bond manager? What the hell are you talking about? You want to be a convertible bond manager? What the hell are you talking about? You want to do treasury arbitrage? What the hell are you talking about? The bond market is actually orders of magnitude bigger than the stock market. And the currency market is orders of magnitude bigger than that. So, the equity market, which is what everybody says they want to be, I want to be a hedge fund manager or portfolio manager, is actually a pretty small portion of total markets. And government bond markets are critical to a well-functioning, global society. And most importantly is the big three, right? U.S. Treasuries, Japanese JGBs, Japanese government bonds, and European central bank bonds or government bonds. It's a little trickier over there because they kind of have a confederation without a union, or a union without a confederation. But anyway, so the U.S. is important because we are the world reserve currency. Now, we've only been the world reserve currency since 1944. Americans are funny. American exceptions. Like I joke, we're like Notre Dame football fans. You got the Notre Dame sign behind me. We remember a past that never was. Like you ask any Notre Dame football fan, how often you win? Oh, we win every year. We haven't won since 1988. But people remember the 40s when we did win every single year because we had a team of 28-year-olds that we recruited back from the war, and we beat up on, College of Osteopathic Surgeons or whatever. The key is that Americans think we've been in charge forever, but they don't know history. I mean, the world reserve currency used to be the little Portuguese currency for about 75 years in the 1500s. And then it passed to the Spanish when they took over the Portuguese. And then it went, and this is the crazy part, then it went to the Netherlands. How the hell does a country the size of Ohio conquer the Spanish Armada? They invented the problem we have, and the reason that Bitcoin is so awesome, they invented central banking. Right? 1607, the first central bank was, what's a central bank? Well, a bank was invented by literally the Knights Templar, the Portuguese monks with the red cross, right? Who thought walking around with bags of gold while they were on their quests, not such a nice task, but while they were out, looting and pillaging, they could be robbed. So they would leave the gold in the bank and they would have notes. But the problem is some of those knights would go out and never come back. So the bank said, maybe we should lend this out, and fractional reserve banking was born. So, but the thing about fractional reserve banking that's actually a good thing, even though maxis hate it, is there actually is some there at the bottom of the rehypothecated stack. There is some value. Whereas in central banking, which is unfathomable, and then Napoleon, you probably heard of him, he came in and he conquered them, and then some of the clan that started the Dutch bank moved to the UK, and they set up the Bank of England, and they financed steamships, and then they became the most powerful navy, and then we invented nuclear ships, and we became the most powerful navy. So that's where we are today. But the problem with the dollar and the problem with bond markets, we had an auction where they went to auction off bonds, and no one showed up. There were no bids. And no, come on, no bids? Zero bids? Literally no bids. And we've only seen that one other time in modern history, and that was right during the global financial crisis. People owned stuff and they would try to sell it, and there were literally no bids. Now think about it. If there's no bids for an asset, what's the value? What's the price? Theoretically zero, but you can't market to zero because that would cause a calamity. So what happens if you didn't have a central bank, and the US and Japan and Europe, the big three, have this, they can literally push a button because you don't print money anymore. You push a button and ones and zeros magically populate, and they just bought all the bonds. So what's happening? So this is a long answer to your question about Japan. What's happening in Japan is for 40 years, their interest rates collapsed to zero. They had no economic growth. They had deflation, the opposite of inflation. Yet their money supply the Japanese make American money printers look like they're pikers. the Japanese money printers, particularly the last central banker before the newest central banker. So Kuroda-san printed so much yen that the yen went from 80 yen to $1 in 2011 to 160, right? Literally lost half its value because they printed so many yen. Yet the average person in Japan didn't feel it. Well, why? Well, because the central bank bought up everything. They bought up all the government bonds. They bought up all the ETFs. They own like 54% of the ETFs and 70 some odd percent of the government bonds. So they literally pushing a button to print money magically out of thin air, and they're buying these real assets. And I can borrow a lot, so I can lever up 10, 20, 30, 50, 100 times. If it's in the bond market, you can do it 100 to 1 leverage and 1% collateral. So that was called the Japanese carry trade, and that was going on. As long as interest rates stay zero, it's all good. Ueda-san comes in. So Ueda-san is the new central banker. And he said, that does not make sense. I am an academic, and I think we need to let the yield curve determine the normal price. So no more yield curve control, no more fixing of rates, no more stepping in to buy all the bonds. Not only Japanese government bonds, but U.S. Treasury bonds. So remember the rumor when Trump started the tariff nonsense, right? We've had 3 big uses of tariffs in the history of the Republic. I'm not saying we're going to end in depression, but that was the last 2 times. Tariffs are bad. They're dumb. They've always been dumb. They're never a good idea. They're a tax on your local citizens. Trump keeps saying, oh, well, for 100 years, we'd had tariffs, right? Because until 1913, we didn't have income taxes. So yes, tariffs funded the government. The government was small. And as soon as government got big, tariffs became a bad idea. And in 1930, they caused a depression. So tariffs are dumb. You've got this decrease of global activity. Well, if you have a decrease of global activity and global growth, well, what does that do for your economy? Well, it makes it worse. Well, that's all fine, because my real plan is I want to crash the economy to lower interest rates. Because see what Japan did, right? They had all this debt, and they just kept crashing their economy, and interest rates went down. So it's like, okay, so you want to literally intentionally crash the economy to lower interest rates.